Hello everyone and welcome back to my channel. Today we're diving into a topic that can save you from headaches, losses and maybe even a few gray hair. Risk management. Whether you're running a business, investing in crypto, or planning your next big move, understanding risk management is key. So let's break it down in just 5 minutes for you guys. Stick around and don't forget to smash that like button and subscribe to my channel. But before we start diving into that topic of risk management, I want to mention I'm not a financial advisor and none of this should be considered financial advice in any kind of way, nor should this be any consideration about choosing or buying any coins mentioned today. So with that being said, let's not waste any further time and get straight into it. Crypto is exciting, but it's also risky. Prices can crash overnight, hacks happen, and scams seem to be everywhere. So risk management is your shield. It's about spotting threats, minimizing losses, and staying in the game for the long haul. Think of it like you're wearing a seatbelt in a race car. You want to go fast, but you also want to be safe at the same time. So how do you manage risk in crypto? Here are 5 essential steps that you need to know. Step 1 is know your risk. Crypto has unique dangers. For example, market volatility. Prices can drop 20% a day. Security risk. How secure are your assets? Hacks can happen. Phishing, or you lost your private key, for example. Regulatory risks, like for example, governments can restrict your crypto assets in some cases. Scams like fake projects or rug pulls. List out what could hurt your portfolio. Knowledge is power in this case. Step 2, diversify your portfolio. Don't put all eggs in one crypto basket. That's important. Spread your investment across different kinds of tokens or coins like Bitcoin, Ethereum, and some other solid altcoins, or whatever you want to choose, what you think is best for you. You can also mix in some other different kinds of projects that you think are worth investing in. Diversification lowers the impact of one coin is tanking. That's the good thing about it. Step 3 is secure your assets. Protect your crypto like it's gold. Use a hardware wallet, for example, to store your crypto assets. Enable two-factor authentication on exchanges. Never share your private keys and watch out for phishing links. A single hack potentially could wipe all your investments out, so be careful. Step 4, set risk limits for yourself that you are comfortable with, like deciding how much you're willing to lose before you invest any of your money. A good rule: decide how much you're willing to lose before you invest. Only invest what you can afford to lose. That's very important. Use stop loss orders on trades to limit your losses. For example, set a stop loss at 10%, 15%, how much you're willing to lose in a bad trade eventually. So it exits your trade automatically once it reached your target of -10, -15%. And also to take profits, of course, regularly. Don't get too greedy and overexcited that you're gonna reach millions. Take a little bit of your profits out once in a while. That's a healthy way to take small profits on the way up. Step 5 is stay informed and adapt. Crypto moves fast. Monitor news, regulations and market trends. Follow legit sources on social media or join trusted crypto communities, for example. If a project team starts acting shady or coin hype feels off, be careful and be ready to sell your coins if a project acts shady. So a good way and a quick tool to stay on track is a crypto risk checklist. Before you buy any coins or tokens, ask yourself, is the project legit? Am I using secure storage? Have I spread my investments good enough? For example, if you're eyeing a new coin or token, check its white papers, team, the community buzz on social media. If it smells like a scam or it looks too good, it probably is too good to be true, or rather is a scam. For example, here's a real world case in Squid Game token soared and crashed when the developers pulled the rug. Investors who skipped due diligence lost millions. Don't be that person, guys. Do your homework and research. Think for yourself. Don't just get into a hype. Risk management isn't just for whales or day traders. It's for every crypto holder. Whether you're hodling Bitcoin, staking Cardano, or chasing meme coins, it doesn't matter. These steps apply. Start small, secure your account, diversify a little bit. Never FOMO into a sketchy project that you don't really know about. The goal for you should be sleep easy knowing your crypto is safe. That's really important. And that's crypto risk management in 5 minutes. By knowing your risk, diversifying, secure your assets, setting limits, and stay informed, you're ready to navigate the crypto jungle. So what's your top crypto risk tip? Drop it in the comments. I'm curious. I'm gonna read every comment that you leave on there. I'm gonna reply to you guys and take my time to go through all the comments you leave on there. If this helped, please smash a like, subscribe to my channel, and hit the bell for more crypto content. Thanks for watching. I'll catch you on the next one.